Hello everyone, welcome to XM Live Trading session. In the beginner's room, it's time for candlesticks and chart patterns. In this session, we're going to talk about interesting chart patterns, reversal, trend continuational, how to enter, how to exit, how to recognize them, how to use chart patterns in combination with candlesticks, as we always do in every Tuesday session, 11 a.m. with me. My name is Junaid Vahid. If you don't know me, I'm trader analyst and forex instructor. Started trading back in 2011 as a full-time trader, and I'm using fundamental sentiment and price action in my analysis. In-depth fundamentals, keeping an eye on the sentiment, liquidity, and trading the price action. My trading style is price action, swing trading. I also trade intraday, depends on the circumstances and the phase of the market. I can trade shorter term and longer term. I don't have any time limitations. I trade the price. So if the price suggests hold on and go for a couple of days, weeks, even sometimes months, I have no problem with that. I have no any issue but to wait. At the same time, if price suggests no need to wait so much, just close your positions and look for other opportunity, I can do it very fast. So no problem with time at all. It's all about the price and the targets plus the supported information. So that's briefly for me. If you have any question about my trading strategies and style, feel free to share your questions in the chat, guys. I'm asking all of you who are joining the session to share as much questions as possible to make the session great. We are streaming also in YouTube, so big hello to all our friends from YouTube. And if you have any questions, feel free to share your questions, drop your questions down below in the comment section. I'll be very happy to answer all of your questions, and you will have the chance to join us in XM Live streaming 9 hours a day for different trading experts and also me. All right, guys, what is going to be the interesting pattern that we're going to discuss, and the reason I'm going to talk about that today, not only, of course, I'm going to answer all the questions about any single pattern you are asking. As a price action trader, I'm confident that I may answer most of your price action, chart patterns, candlestick questions. So feel free to share any. If you have something that confuses you in terms of price action trading, chart pattern trading, whatever, candlesticks, uh, now is the time actually to share your toughest question to me. So I will try to take care of the rest. If I cannot answer your question, most probably I'm going to redirect you to expert who probably can, that I believe he can. So what about the fundamental and sentiment side of the things? I'm doing in-depth fundamental analysis for investing and very long-term purposes, which I'm also using time to time in my trading as a supportive information. I believe that trading it's uh, purely price trading. Of course, if you have great support from other information, it's even better. At the end of the day, we need an edge that we can use for applying our risk management. The risk management actually is the most important thing, is the key to success in trading. Of course, all other cliches are also important, like discipline, effort, and all the kind of things that you have heard maybe millions of times. But put your attention mostly for risk management and be disciplined with your strategy. Have your strategy. Don't trade your analysis. This is something that many traders are doing as a mistake. Like, they're analyzing the market and they're trading the analysis. They don't generate ideas through analysis and use the strategy to implement a strategy to trade that. And with the right risk management, they just trade their analysis without preparation. Most of the time, even they don't know how to exit from the entered from them trade, which is a problem. Even though you might be a great analyst, you could be a wrong or terrible trader because you don't have preparation and plan for doing that. That's why the session like this is going to help you a lot to structureize your trading, learn some strategies using chart patterns, how to enter with candles. I guess that can help a lot. I pretty much believe in this. All right, guys, let's see what's about a very important V-shaped recovery in trading. I'm directly going to go for chart patterns by opening the real market chart, because I believe um, this is the best way to learn, because uh, slides and so, yeah, theoretically can show a lot, but since we are talking about charts, the best way is just to look at the price itself. I have gold here. No, necessarily I'm analyzing gold. If you have any instrument you want me to analyze, you want me to give you an example, just drop it on the chart. I'll be very happy to do that. Because I have gold, it's one of the instruments that I really love to trade very actively, and recently it's working very, very well for us, since it's actually in this big trending and ranging market. Like since here, and here, we managed to get most of the waves with huge accuracy. Of course, we have losses. They are part of us. They are like our little friends that keeping us strong and disciplined, because there are big reason we learn trading and getting even better with those losses. So what is this patterns, guys? So I'm often talking about actually V-shape and A-shape recovery. That's how I'm going to call them, because you might find a bunch of different names for this pattern, but because kind of the best represents the shape of it, like V-shape, call it recovery, or A-shape, losing the whole prior gain, as I like to say. So these two are very important chart patterns on the chart. Many trading methodology, price action methodologies are using them. If you are looking at Wyckoff theory, you will see that most of the time they call it spring and upthrust, especially if it comes after some strong resistance, false breakout, some strong support, false breakout. They can call it climactive move, false breakout, up thrust, again climactive move. So there are important force on the charts that we traders, when we see them, we really need to pay attention. It's one of the important price action that happens with a huge warning sign. Okay, whenever you see something like this, you have to pay attention. Now I'm going to draw a couple. You see my chart currently, it's more looking like a bar chart. I zoomed out my candle chart just to see more moments of this V-shape and A-shape recoveries. Look at this right now. Massive drop, quick recovery. Okay. Look at this. Market comes down, massive drop, quick recovery. Right. Then what do we have? Massive drop, very quick recovery. Look at this right now. Big gain, losing everything. Okay. So when you have this, look at this. Massive drop, huge recovery. Okay. So when we have those V shape and, like, let's call them A shape, right? A shape and V shape. This is a recovery. This is the losing the whole prior gain. They are giving us the strength of the counterattack. Like if there are big bears, a lot of sellers, out of nowhere, very strong bullish pressure uh, happens that beats all the bears that were leading that market. Okay, imagine you have bearish price action, little recovery, so call it correction, bearish price action, pullback, strong bearish price action, strong wave down, and at some important price level, something happens that really immediately recovers everything that this instrument has been lost. Like wherever this instrument is losing, it's being recovered very sharply and fast way. It's not like going down and gradually, slowly, tries to recover. Well, still looking very good to recover the whole prior loss. But when that thing happens very sharply and fast, it shows a lot of important information that the counterforce buyers are really strong, and they really managed to move the price to where it started to lose. So meaning that 100% of the sellers are not there, because they were eaten from maybe 200% of buyers that managed to recover the whole prior gain, and maybe they are going to bring more buyers after them. Okay, so this means that potential huge reversal of this trend is really possible. Well, okay, we have a lot of those chart patterns. Which one is actually the best one, or how we can exactly trade them? I know about this, and I can see it when I open the chart. You may think, but the problem comes with how to trade that pattern. Okay, because you might find a bunch of different information out there. Of course, every trader can use those patterns indifferently. Some traders are using it just for information purpose, some traders are using it for trading purpose. Because why I say it's information purpose, you may say, okay, if that pattern is so great, why somebody's going to use it for information purpose? Number one, because he's a trend follower. Well, since this pattern is reversal pattern, the trend follower is not allowed to trade the reversal pattern. Number two, wrong entry, wrong exit, and it feels like if I enter here Where should I place my stop loss? Is it above the previous structure high, which is crazy risk to reward ratio, where you should be your take profit in order to like this trade to make sense, right? So if you just go for previous structure low, look at the range of your stop loss and take profit. Huge stop loss compared to very small take profit. Does that make sense? You may say, oh, if it's accurate, why not? Yes, once it's going to be accurate. Accurate, what accurate means? Let's think about this accurate before we move to the next question. So, accuracy. This is very important. I'm fine to use wide stop loss if I reach my targets. Wow. Yeah, that's actually logical. Why I never thought about that. Like you are having 300 pips of a stop loss to get 60 pips of take profit. Well, every time, like most of the time, you're going to get your take profit, which is making you accurate. Wow. You see, you use crazy stop loss and very small take profit, and you're going to be super accurate. That's an amazing marketing technique. Well, but it's not great trading technique. Okay. Why is that? Because accuracy doesn't mean that you have 10 out of 10. High accuracy means you have 6 out of 10 trades in profit, 7 out of 10 trades in profit, 8 out of 10 trades in profit, 9 out of 10 trades is profit. Rarely you might get 10 out of 10, but you're going to get back to some of those, okay? You're going to have this loss. So, and what? I'm going to have one loss and I'm going to have a bunch of 6, 7, 8, 9, 10 profits. All right, let's do some small math. You have 300 pips of a stop loss, 60 pips of a take profit, or 100 pips of a take profit, or 200 pips of a take profit, but still way bigger stop loss. Well, using that, if you are having 6 times by 60 pips of a take profit, this is going to make 360 pips of a take profit. If you lose, how many? Two once, twice, just once or twice out of 10. How many are you going to lose? 3 to 600 pips of a loss. It's enough to have one or two losses to eat all your gains and even make damage to your account to lose your money. Okay. So that's the game of the risk to reward ratio. You don't try to be accurate. You try to be risk manager. Okay. This is very important. So what we are using those patterns to increase the accuracy potentially, but at the same time, not increase the risk. This is actually increasing the risk in the name of accuracy. Well, we saw what is the accuracy. Accuracy is not seems like not so important. Even if you are less accurate, and instead you're doing this, if you just swap and have less accuracy, but whenever you hit your target, you have huge profit potential and small risking small every time, then seems like one or two time take profit can recover all your losses, and even you can end up by making money. Imagine if you manage to increase your accuracy using chart patterns, technical indicators, and something, then you can just end up by making huge profits. Okay, so we understand that risk to reward is a key part, and this pattern is actually coming with that risk to reward ratio because it's a huge V-shaped recovery. Standard way that of traders that are trading it, they are buying at the top and they are placing wide stop loss and they are aiming for small gains. The pattern ends up by making very nice accuracy. The problem comes with when you are losing, when you are wrong with this and just falls down and kicks you out from this trade by having crazy big stop loss and eats all the prior gains and really hurts. Okay, so how we can trade that? There is very simple way, guys. Just going back to the slides. Um, in trading, V-shape is recognizing the pattern like head and shoulder, flag pattern. It's like double top, double bottom, all kind of patterns. It's just a chart pattern which you can basically see everywhere. And lower time frame, it doesn't matter what's going to be the time frame, bigger time frame, lower time frame, any kind of time frame. The V-shaped pattern could form anywhere on the chart, referring to strong bullish attack after a substantial price drop, or vice versa when you have very strong rally gain and then out of a sudden the market loses the whole prior gain. So basically you have sharp move to the upside like this, and out of a sudden bears are joining, buyers are taking their profits, and boom, the market makes very sharp loss of the prior gain. This is giving a huge signal that something is going on. Okay, it could try the different based on the time frame. Uh, you can also use a multi-time frame trading and analysis, but you need to recognize this V-shape or A-shape pattern in order to increase the accuracy by implying some good risk to reward ratio enter and exit strategies.